had one right here the entire time. Like the exact
Okay,
same
everyone,
one, basically.
welcome. For those that haven't done so already, if you wouldn't mind just jumping on the Nearpod link. And today is February 14th, Valentine's Day.
Grandma.
Let's talk to some of you guys before.
I think it should just be her.
Hopefully,
What's there? I think it might be Cage. So.
You'll get some sugar or something like that. Single Pringle Day. Does that mean you get to eat Pringles? Did you guys see the Pringle commercial during the Super Bowl where like the can gets stuck on his hand?
I came in here once with the
and it goes through his whole life and he couldn't get out of it. That was actually a pretty good one.
Should I go?
I thought there was some okay commercials, but not the best. But that was a funny one.
I forgot I was supposed to do that.
In his casket. That's bad. He's in his casket and he like has a Pringle can still stuck to his hand. He's like,
but if anything, because I forgot to tell him when he came in, you can say something about it, and I'll be like, "Oh shit, I
good old Pringles." All right,
I got my money too on, then I'll be like, "Oh, mad
stop talking about Pringles, I guess." All right, remember this is being recorded for learning
I got
purposes.
more money in my wallet too, so even to make it look better, but like, here's new money, so we can actually go get fucking drunk.
And my expectations, remember, that
because that'd make kids
follow along with the Nearpod lesson. Make sure you use the chat tools respectfully and appropriately. Respond to questions and instructions.
I'm bringing it out here
First time.
All right.
I'm just going to jump into the class real quick so you can see here. Remember,
I like right here.
I post the class recordings right here to the course announcements. If we look at the plan, we have some stuff coming up. You guys have a break coming up. You weren't aware of this today, or you're going to be out of school. Is someone's mic on? Oh, I can't hear anybody. Is somebody hearing something? Because someone's talking over me. Hold on, I can't hear anything on my end. Let me stop sharing. Can you guys hear anything now? It stopped. Must be a tab I have open on my internet, but I don't know which one it would be. Okay. Well, let's try this again. Let me reshare again and make sure that you guys aren't hearing all that background noise that you're talking about. Okay, what about now? Are you guys all good now? It's good? Okay. Okay, so real quick here. The 17th, 18th, and 21st, there is no school, okay? So we will not have a live class. I'll be sending out a recorded class on next Monday that you can do for the next week on there. So we got that. This week, just so you know, you have module 9 and 10 that you'll need to get done. So if we get right here, module 9, talk about the investing and then also understanding your risk analysis. And that's what we're going to be going over is basically risk analysis today and how that all works. So, okay, so that kind of shows where we're going. The lesson objectives today is given quizzes in the OLS, students will accurately answer multiple choice questions about investing and risk management with 80% accuracy across one trial. Okay. So risk management comes down to the fun word that nobody likes to pay for, but if you need it, you really need it. Insurance. And there's a lot of different types of insurance. So we're going to talk about that as we go through here. So basically, what is risk management? What it is to in exchange for a relatively small payment, which is usually called a premium. That's what you pay for insurance. It's called a premium. You're protected against a chance of a big financial setback or large loss. So the best way to describe it is like an automobile accident, right? If you're driving down the road and you hit another car, could you afford to pay for the car you hit? Most likely no. So here's a little video about it, and then we'll have some discussion after that.
Hi, I'm Becca. Today we will discuss the purposes of insurance and risk management and discuss insurance needs at different stages of life. Life is full of risks. You can try to avoid them or reduce their likelihood and consequences, but you cannot eliminate them. You can, however, pay someone to share them. That is the idea behind insurance. There are speculative risks, that is, risks that offer a chance of loss or gain, such as developing a killer app that may or may not sell, or investing in a corporate stock that may or may not provide good returns. Such risks can be avoided simply by not participating. They are almost always uninsurable. There are pure risks, which are accidental or unintentional events, such as a car accident or an illness. Pure risks are insurable because their probabilities can be calculated precisely enough for the risk to be quantified, which simply means it can be priced, bought, and sold. Risk shifting is the process of selling risk to someone who then assumes the risk and its consequences. Why would someone buy your risk? Because in large enough market, your risk can be diversified, which minimizes its cost. Insurance can be purchased for your property, your home, your health, your employment, and your life. In each case, you weigh the cost of consequence of a risk that may never actually happen against the cost of insuring against it. Deciding what and how to insure is really a process of deciding what the cost of loss would be and how willing you are to pay to get rid of those risks. Unlike insuring property and health, life insurance can combine two financial planning functions, which are shifting risk and saving to build wealth. The decision to buy life insurance involves thinking about your choices for both and your opportunity cost in doing so. Life insurance is about ensuring your earnings, even after your death. You can create earnings during your lifetime by selling labor or capital. Your death precludes your selling labor or earning income from your salary or wages. But if you have assets, they can also earn income. They may be able to generate some or even enough income to ensure the continued comfort for your dependents, even without your salary or wages. In other words, the larger your accumulated asset base, the greater its earnings, and the less dependent you are on your own labor for financial support. In that case, you will need less income, protection, and less life insurance. Besides the idea of life insurance, which another way to protect your beneficiaries is to accumulate a large enough asset base with a large enough earning potential. If you can afford the life insurance premiums, then the money that you will pay in premiums is currently part of your budget surplus and is being saved somehow. If it is currently contributing to your children's education savings or to your retirement plan, you will have to weigh the value of protecting current income against ensuring your children's education or your future income in retirement, or that surplus could be used toward generating that larger asset base. These are tough decisions to weigh because life is risky. If you never have an accident or illness and simply go through life earning plenty and paying off your mortgage, saving for retirement, and educating your children, then all of those insurance premiums just wasted? No. Since your financial strategy includes accumulating assets and earning income to satisfy your needs now or in the future, you need to protect those assets and income, at least by shifting the risk of losing them through a chance of accident At the same time, you must make risk-shifting decisions in the context of your other financial goals and decisions.
Okay, so that is what risk management is, right? Being able to transfer something else to someone else just in case something were to happen. So as we kind of talked a little bit about getting in an accident, right? Something that is a risk that can be calculated, we can figure it out. Okay, so hear this. The number of insurance claims for blank accidents involving teens is blank higher than those for the other ones. So let's try to fill in the blank real quick. So if you're on the Nearpod, please try to fill that in. If you're not on there, let's try to do it together. So the number of insurance claims for blank accidents, what do you think that would be? What type of accidents? Somebody can put that in the chat. Auto, perfect. Okay. So the number of insurance claims for auto accidents involving teens is blank percent higher. What do you guys think? %40 higher or 100% higher than those for blank? Okay, somebody says 40. Let's try that. Or 100? 100? Okay, I think 100 is probably pretty good. Is that 100% higher than for, what do you think? Adults. Yep, adults. Blank crash rates. Let's say teen crash rates drop by 40% 6 months after getting their license. That sounds about right. There we go, 6 out of 6. Okay, so that's something that can be measured, right? So you can buy insurance for your vehicle. Now, is your insurance going to be higher if you are a teen versus an adult? Let's say yeah, right? And then when you get more experience, then that insurance goes down. Okay, it's kind of interesting too that the premium for, so basically how much insurance costs for males, teen males, is more expensive than teen females. Why do you think that is? Discrimination, somebody said. Okay. Less careful, more aggressive. So yeah, they're found to be, they're actually, girls get in more accidents than boys, but when boys get in accidents, it's usually bigger and more damaging. So that's why, statistically speaking, right? They pull all of those statistics and they figure out what it would cost. Okay, so in an event, because I'm assuming some of you maybe are driving already or looking to get your license, could you afford to pay for the damage as your car is in a car wreck? Now, I'll tell you, this was probably 20 years ago when I first got my license. That shows you how old I am now. I went and backed I had a little Jeep, an old Jeep, a CJ7, if you know what a CJ7 is, a really old Jeep. It was kind of like a Wrangler, but it's before Wranglers came out. I was backing up and I ran into my friend's vehicle. That was the first accident I ever had, and the only one that's been my fault so far, knock on wood, right? But you want to know how much that cost for backing into my friend? It just banged up the side of his thing. We didn't even fix my Jeep. My dad told me I had to fix it myself. A lot of money. What's your thoughts? This was 20 years ago, bear in mind. And it just hit the side of his car. And I was just backing up, maybe going less than 5 miles an hour. Higher than that. $5,000 lower. So it was about $2,500, almost $3,000, pretty good, to fix just the side panel of his car. The little, it was insane, right? And so as you kind of look at this here, can you afford to pay for the damage caused in the car? So if you didn't have insurance, right? And luckily our insurance paid for it, right? My dad, he had an insurance policy on it and we're all good, right? But I probably couldn't afford $2,500 back then. You know, my parents wouldn't want to afford it either. So, but here's the bigger issue, right? If you were to get in an accident and you were to cause bodily injury to somebody, the ambulance just coming out, I think they charge like $2,500 to $3,000 just to see people. And each person, right? If they're even more hurt and take an ambulance ride, it could be $15,000. You can see how that can just build up over time and how expensive it would be. So most people, unless you're someone really wealthy, cannot do that. Okay, so you got different types of insurance, okay? There's automobile insurance. We've talked about that quite a bit. Disability insurance. So if I were not able to work anymore, and I became disabled, if I had disability insurance, it would still pay me some money. Homeowners or renters insurance. So here's another thing. So I own my house where I'm paying it off to the bank. If my house were to catch on fire, what would happen, right? If I didn't have insurance, I would still owe that loan payment and I wouldn't have any money, right? And all my possessions inside. So homeowners covers your possessions inside, renters covers your possessions inside, and then homeowners also covers the home. Life insurance is something that's pretty big. I know quite a few people that have passed away before, you know, we would have liked them to. And being able to have some life insurance to help out. Like I have 3 kids and a wife. That's there. You heard life insurance is a scam? Yeah. Well, okay. So there's certain types, right? You got to make sure that you get the right type of life insurance. There are some life insurances that maybe aren't the best, but honestly, for maybe $5 a month, $10 a month, it's kind of a good thing to have, you know, $100,000 to pay for your burial and your other stuff. So insurance like a shield. So yeah, so insurance protects you, right? Yeah, it helps protect you and shields you from lawsuits, from different things that would happen. So another one's like health insurance. That's the last one. So if I were to get sick, had to go to the doctor, we know how expensive the doctor is. I mean, you should. It's super expensive. Like, I mean, I could spend so much money on there that I could lose everything if I didn't have health insurance. All the stuff I've built up over time. So it's just a way to protect you. Okay, so we already talked about insurance. It's protection, large scale financial loss. What you pay is a premium, and you can pay that however they like, monthly, quarterly, semi-annually, annually. There's also something called the deductible, and this is more in the regards to automobile insurance, home insurance, and health insurance. But in order to kind of dissuade you from filing claims all the time, they have what's called a deductible, which means that you have to pay the first amount up to a certain amount before they will pay it. So for example, it's usually probably around $500 to $1,000 that you have to pay. And health insurance ones are a lot more expensive, sometimes like $2,500 to $5,000. You have to pay before the health insurance will kick in, or the insurance policy will. So you're not basically paying for everything. Automobile insurance, it's a huge one. It's a requirement. If you're driving a vehicle, you need to have that vehicle covered. You need to have liability insurance, which means if you hit somebody else, medical payments, uninsured and underinsured motorist. That's basically if somebody doesn't have insurance or have enough that you're still covered. And then also collision, which pays for your car to be fixed. Auto policies, it all depends. There's so many different factors. I think somebody put up here that, I said, why did our males more? Somebody said discrimination. I guess you could call it that, but it's all valid upon what they do, right? They can get your age, your gender, your marital status, all of that kind of stuff, your driving record, your credit reports. They'll get that as well. And they'll say, well, this person, how high of a risk is he to be getting in an accident? And then they charge you more depending upon your risk. If you've had tickets, if you have gotten accidents before. Health insurance pays the medical bills in case you get sick. Property insurance, that's for like fire, flood, or theft. Yeah, so they actually give you a discount sometimes, Sarah, if you have if you're a good student. Okay, they're able to show that those that are good students, those that are good students there's a correlation to being a better driver. I don't know how true that is, but the insurance companies, they do that. Okay, life insurance. Okay, so this is where there's different types. There's something called term life insurance that goes for a certain period of time. And then there's whole life that continue on all the way until you pass away. And sometimes there's a funding mechanism in there. Some people really dislike some of the funding methods and stuff like that. And some people say it is a scam. Personally, I think if you understand how to do it and you do it right, you're completely fine. So I don't think it's a scam. I mean, if it was a scam, we're going to be talking about schemes and scams next class. And so that will just be something to think about. But all in all, if they're a legitimate insurance agent selling through an accredited place, it won't be a scam. Okay, so the different needs you have: health insurance, property insurance, life, disability, liability. One thing, liability, so I protect myself in different ways. Like, for example, if you have a trampoline and I have other kids over here and a kid jumps off the trampoline and breaks his arm, I could be liable for that, right? They could sue me. So I have liability insurance in my house that protects me. This is something that's a little bit different. It's called estate planning. Once you get to a certain point in time, you'll want to look at give your last will and testament. Guess what it's called? So for wills, trusts, joint ownership assets, once you accumulate so much wealth and stuff like that, you want to make sure it's kept safe and it's passed on to where you want to pass it on to, whether you put it into a charity or give it to your kids or whatever you'd like to do. So these are some things that you need to know kind of moving forward. A lot of them, you're probably like, oh, I don't really care right now. But over time, they'll become important to you in real life. So that's all I have for the class today. Remember, you have modules 9 and 10 that you need to do this week. And remember, we won't have class next week. I will be sending out a recording. So I'm going to stop sharing and stop the recording.